Well, good afternoon. Thank you so kindly for coming back. And this is the classroom of James Wheeler. And I'm hoping that by now you're starting to understand that I have a real passion to help everyone understand just a little bit more about how money works and why that's so important because it truly affects, uh, are we properly preparing for the retirement years and for that life journey? And so I think about today's families and whether you're 30, 40, 50 years old or whatever your age, you can even be someone that's 20 years old. Where do you put your money? And what makes the most sense? And certainly the impact of losses has a huge effect on your money. But the other thing I want to show today is where do you put your money? And what are your options? And so I'm going to kind of draw that out just a little bit here. And Jay, I'm going to switch to green because we're talking about money. Yeah, it kind of looks like a cross for a real specific reason because when we talk of money, we need to talk about the blessings of the Lord, and I want the fullest blessings of God for your financial life, well, for your entire life also. Um, but there's a couple places where you can put your money. We're going to talk about a bank. And so, in a bank, which I believe we should all have a savings account, like I said, for emergency funds, if you go into a bank, you hand them a $100 bill, I don't know how many of you think about it, but the question becomes, out of that $100 you give them, how much of that do they set aside as collateral, as a guarantee of their ability to pay that money out? And so, for me it becomes really important, if I give someone money, how much do they have the ability to give me my money back? And so the banks, and you guys can Google all this stuff, it's on the websites, there's plenty of governmental resources, but every $100 that you put into a bank savings account, they collateralize it by about 2 cents for every $100 to guarantee their ability to pay you back that $100. And some people say, yeah, but there's FDIC insurance, which for most, it's about a $250,000 insurance policy that the U.S. government says we will back up the bank and its ability to pay you back your money. But may I challenge you for a couple things? How able is the federal government to give you back your money if the bank collapses when the United States itself, all right, is approximately $22 trillion in debt, and that's based upon the government's ability to pay you back, and if you meet certain requirements. So, again, I'm a fan of saving money, but I'm also a fan of saving your money responsibly in a place that has the ability to pay your money back. So, plan B is, we talked about index accounts. Index accounts are an insurance product. And so we want to do business with the banking side for your daily saving stuff and for your emergency account, but I want you to at least consider, why would I want to utilize an insurance company financial product for saving? One of them is, for every $1 that they're obligated to pay out, how much do they set aside in their ability to pay out? And so a lot of them have much more, but the national average is $5.07 for every $1 that they're obligated to pay out and payouts for settlements, right? And so if, I know I'm just being honest with you, if I had to personally, this is why I personally choose to do business with an insurance company for long-term savings for my own financial plan and my wife's. We both have our individual savings plans. I personally feel way more confident of giving an identity who says that they're going to manage my money if for every dollar that they're supposed to pay me, they have set aside $5 to pay me back. I feel way more confident in that than the 2 cents for every $100 that the bank has. And I want to challenge you guys, back during those, remember we went through the uppy downy years of 2008 through 2014, how many banks went out of business? And they're still trying to define, well, we're talking about banks, savings and loans, credit unions, and all that. But can we all, generally speaking, agree that approximately 2,500 banks went out of business? And how many insurance companies during that time went out of business? Not one, zero. And so the reason for that is the federal government requires that approximately 90 cents for every dollar they must set aside to guarantee their ability to pay. That's not a requirement of the bank. The insurance industry all in itself is about a $70 trillion industry. It's the largest industry upon the planet. And so that's where the wealth truly is held. Why would I want to save also an insurance product? When you look at the average rates of return, and the average rates of return, let's say again, it's about 9.75%. So I'm a fan of just simple math, as you guys are learning. I'm just going to say it's 10%. And so if it's 10%, we have to factor in inflation. And so if you remember the rule of 72, the historical inflation, as you guys probably already know, the 30-year historical is about 3%. So if you take 3 divided into 72, right, it's about 24. So about every 24 years, everything becomes twice as expensive. And here's the basic, test of that, right? Is, if you went into a store about 25 years ago and bought a gallon of milk, we all know it's probably about $2. And today's gallon of milk, it's around $5 a gallon. How much were you paying for a gallon of gas about 25 years ago? It was definitely less than it is today. And so we all understand inflation. So if inflation is 3% and the average rate of return is 10, the true net rate of return is about 7%. And that's why I used the illustration earlier of your money growing, and we used the interest rate. And so the average rate of return that we net is 7%. And so what I want to recommend to you is to at least consider talking about what insurance products are available so I can save my money, avoid the impact of losses that we discussed last time, make sure that enough money is set aside for its a capacity, the sheer financial ability to pay you back what you put in. And one of the things I'll touch on lightly also is if you save money into a 401k, you're subject to loss, and we all know that. There's no 401k, 403b, 457 mutual fund account that you can have where they can declare that, one, they set aside money to guarantee the return on investment. And so one of the challenges that I think with saving money in those qualified accounts, just on the surface, without digging deeper, and we'll talk more about that, the accessibility of your money, is how your money grows. And we're going to get into that probably in the next sessions or so. But what I want to do is hopefully open up your hearts and your minds a little bit to understanding the impact of losses again, true rates of return, and why you should consider an indexed account as an alternative to other financial vehicles. So I'd like to thank you very much for watching. We're going to get into more of the comparisons next session, and we're going to go into provisional income limits. That's not taught on, but what I'm hoping is if you have any additional questions, feel free to email us, like us, woo! And if you subscribe to us, yep, subscribe. We promise that we will follow up with a lot more, hopefully super helpful videos. Thank you so kindly. Many blessings to you, and hope you have an amazing day. Bye-bye.